Hello students, in this video we are going to see some concepts relating to the dissolution of partnership firm. So what is dissolution of partnership firm? So as per the Indian Partnership Act 1932, the dissolution of firm means termination of partnership among all the partners of the firm. So it is a termination of partnership among all the partners of the firm, which means that the partnership firm is dissolved or liquidated or wound up. So, when a firm is dissolved, it means that the firm is completely wind up. There is no firm after this in future. That is what dissolution of partnership firm. The business of the firm terminates. The business of the firm comes to an end. So, since the business of the firm comes to an end, since the partnership firm comes to an end, all the assets are disposed. All the assets of the firm are disposed, and also liability should be paid. While we are paying off the liabilities, there is an order of paying the liabilities. First, we have to pay the outsider's liability. Once the outsider's liability is paid, then we have to pay the partner's loan. Then, after paying the partner's loan, we have to pay the partner's capital. Okay, accounting treatment at the time of dissolution of the firm. So, when a firm is dissolved, what are the accounts to be prepared? The first account is realization account. The realization account is prepared to find the gain or loss on by realizing the assets and by paying off the liabilities at the time of dissolution of the firm. Then partner's loan account. Partner's loan account is prepared to settle the partner's loan. Partner's capital account is prepared to find the amount which is finally due to each and every partner. Cash or bank account. Cash or bank account is prepared at, at last at the time of dissolution of the partnership firm. Okay, realization account. Realization account is opened at the time of dissolution of the firm. So, when a firm is dissolved or when a firm is going to be liquidated, there is no more firm in future, then the realization account is prepared. Realization account is prepared at the time of dissolution of the firm to ascertain the profit or loss on realization of assets. So, when you are selling the assets, there is any profit or loss, and by paying the outsider's liability also we are getting any profit or loss. To ascertain that, the realization account is prepared. This account is closed, so whether we are getting profit or we are getting loss on realization of assets and paying of liabilities, that profit or loss should be transferred at last to the partner's capital account. So, this is a format of realization account. So, first of all, we are transferring all the assets in the partnership firm to the debit side of realization account. We always know that assets always shows debit balance. So when you are canceling an asset or when you are transferring an asset to some account, it should be credited in the journal entry. So the journal entry is realization account data to land and building, realization account data to plant and machinery. So all the assets are transferred to the debit side of realization account, and all the liabilities are transferred, all the outside liabilities are transferred to the credit side of realization account. We already know that the liability shows credit balance. So while we are transferring the liabilities to the realization account, the liability should be cancelled. The liability should show the opposite balance of debit balance. So the journal entry will be sundry creditors account data to realization account. So the sundry creditor should be debited to realization. All the liabilities are transferred to the credit side of realization account. Then, after transferring the assets and liabilities, the asset should be disposed. The asset should be sold out. Then, when you sell the assets, you will get sale proceeds of assets. So, when you realize the asset, the journal entry is cash or bank account data to realization account. So cash or bank account data to realization account. Since in the journal entry the realization account is credited, the cash or bank is coming on the credit side of realization account. If an asset is taken by a partner, then the journal entry will be partner's capital account data to realization account. So In the realization account ledger, it is written on the credit side of realization account. Then here, when you're paying off the liabilities, the journal entry will be settling the creditors. For example, settling the creditors in the sense the journal entry will be realization account data to cash or bank account, because credit what goes out, the money is going out. So realization account data to cash or bank account. Since the realization is debited in the journal entry, the cash or bank comes in the debit side of the realization account. Then, for example, if any liability is taken by the partner, then the journal entry will be realization account data to partner's capital account, because the partner is paying the firm's liability. So, the firm is liable to pay to the partner, as a result of which the partner's capital is getting increased. So, in the journal entry, the partner's capital is credited. So, the journal entry is realization account data to partner's capital account. Since the realization account is debited in the journal entry, we are writing on the debit side as to partner's capital account when the liability is paid by the partner. So after transferring the assets and liabilities at the time of realization, and after realizing the assets, after writing this amount which we are receiving from the sale of assets and the assets taken by the partner, and after the payment of liabilities is recorded, and to what extent the payment of liability is made by the partner, how we have recorded the payment of liability which is made by the partner. After doing all these things, finally we will compute the profit or loss on realization of assets and payment of liabilities at the time of dissolution of the firm. This profit or loss will be transferred to the partner's capital account, because ultimately it is going to be shared by the partners only, so it is transferred to partner's capital account. Thank you.